So I think I think let's break down the agenda for the conference call.
Hmm?
Uh, the agenda, I mean, the agenda, as I would suggest, is essentially analyze the replies uh, that FTR has posted on its Facebook,
Hmm?
so
Yeah, sure.
that there is clarity over there.
Hmm.
I will not spend more than 15 to 20 minutes on that
Yeah,
because they're extremely easy replies.
yeah.
So,
Nah, that's good.
yeah, but a post about 15 to 20 minutes maximum on it.
Hmm?
I will get down to essentially analyzing the FTR transaction
Yeah.
because there is not much that is known to the shareholder as to what exactly the transaction is.
Hmm.
Okay, I mean there have been so many iterations on the transactions
Yeah.
uh, that I doubt whether what the shareholder knows is not what he will get if at all the transaction is made public.
Yeah.
Number one, and number two, I want to basically touch upon how does it compare to the rights issue.
Yeah, sure.
So yeah, so I think this is broadly the agenda that I want to take. Okay,
Hmm?
I think people are ready to. I mean, people can ask me questions
Yeah.
around this agenda. All
Yeah.
right.
That's no problem.
So yeah. So should I one second? I'll just open
Hmm?
uh, the Facebook replies.
Yeah, yeah, of course.
Yeah, Facebook replies of Fire Steel.
Hmm.
Mhm. Uh, One second. No?
Yeah, no problem. Take your time.
Where has this guy put his? Oh, because I just want to essentially just uh, analyze what he's written.
Hmm?
I don't want to invent anything.
No,
Simple
no,
as
no.
that.
Of course.
Oh. Okay.
Hmm.
Okay. Got it. Okay.
All right.
Got it. Okay. Cool.
Good.
So I think Michael and Basil both have taken the trouble in answering some of the due diligence question
Hmm.
that I believe had been posted by the shareholders,
Yeah.
and they haven't really covered most of it, but they've covered what they wanted to and what they can.
Hmm.
Okay, but I'll just go through. Um, I'll go through what they have written.
Yeah.
Okay, so the overview. All right.
Yeah.
Now, I have read through all of this. Okay, when you take, and I don't want to spend more than 15 to 20 minutes because um, a lot of these lines can essentially be integrated in one line. Right? Okay, so
Hmm.
uh, the question that had been asked, okay, when is there a legal, technical, and financial due diligence on FTR's proposal? Okay, now, well, they choose to write a lot on it. Okay, but in one line, bottom line, there is no legal and there is no business stroke financial due diligence done on FTR's proposal. It's as simple as that in one line. Okay, I mean you can write 50 lines to it today.
Hmm.
At the most, when he refers to John Boyd, he's referring to something like a technical due diligence, which I believe at the end of the day will also not constitute 100% of it. It will constitute something like 40 to 50% of it. Okay, so a technical 50% has been left out. Legal and financial due diligence is zero. Okay, and I would rather be interested in the financial stroke business stroke legal due diligence, which is not there. Okay, it's simply not there. Okay, and I think that a transaction as serious as this, where you are giving away 51% to 60% of the company, I mean, even NASDAQ says that there should be a neutral diligence done by the board. This is not FTR's responsibility for sure. The board should be doing a due diligence. A neutral due diligence report should be given to the shareholders, and the shareholders should have minimum 60 days to read through the diligence report. If this process is not followed, I think the transaction itself is non-compliant as of today basis. But I think that the legal, financial, and due diligence should be done. It is not done. Bottom line. The last I spoke to Michael on phone, he said that Saraji Rajan has given some kind of a report, but there is no report. There is no formal report that has been made public by the board to all the shareholders, which the shareholders can see for themselves. A serious transaction of this sort will demand a very thorough professional due diligence report, which includes legal, financial, business due diligence as well. John Boyd does not cover legal. John Boyd does not cover financial. John Boyd does not cover business. John Boyd, with due respect, would possibly cover a major portion of the technical due diligence. Okay, so there is no due diligence report that has been given. All right, and I do not know how this entire proceeding is even going forward without having a due diligence report. For example, if rights issue were to be conducted, okay, will the legal advisor to the rights issue not conduct a due diligence? Will Ebly Bank stroke the financial advisor not conduct a due diligence? You create a rights issue prospectus. Okay, the prospectus is placed in front of the shareholders to study the prospectus, and against the prospectus, the shareholders invest. At this point in time, where is FTR's so-called prospectus corresponding to the due diligence report that we are demanding? There is no due diligence report. Bottom line, one line. Let's not argue upon it. If there is a report, please give it to us. Okay. Then it comes down to the joint venture structure. Well, I just want to ask one thing. Again, one line. I mean, a lot of things are written on it. It's to me, it's highly unimportant. I want to kind of get down to bottom line analysis. Bottom line analysis is pretty clear that I think that Michael Botha and Michael Hepworth, if they are the front runners towards lead managing this deal, should tell us in which part of the world is there a structure where one private listed asset is basically governed by two listed structures in two different parts of the world. Okay, I would rather like to see it. Give me an example. Give me one example where a private limited company is governed by two different, a private limited company, okay, wherein 100% shareholders of the private limited company are governed separately under two listed structures in two different geographies. Okay, the whole point of divorcing and separating one shareholder group of one company, okay, into two shareholder groups, okay, in two companies, in two listed structures. I mean, I personally don't want to spend even 5 seconds, okay, in arguing this nonsense. It's complete nonsense. Okay, this is not a done deal. If at all he wants to have his efficacy on the deal proven in the due course of this conversation, I will prove it to you. The only way you can even look at the FTR deal on the efficacy side, is if at all he does the deal in Nomi. If at all he does the deal in Nordic Mines, I am prepared to put my neck on the chopping block and analyze the deal on merit. This is nonsense. One private limited company, two shareholder groups, one in Nordic Mines, one in FTR. What for? Why? Okay. The reasons why is I'll tell you. Okay, the reasons why that he's giving, okay, is also quite. I don't think is pretty frivolous. I mean, he can go and give these reasons to people who are unexperienced in deal making. This is nonsense. Okay, well, let's take. He says something to the extent that Toronto Stock Exchange would have. This would have been a very complicated transaction because if at all we wouldn't have done this, this was the fastest way of doing it. Otherwise, it would have taken a longer time. I think time is one issue which he has. All right. Let me just tell Michael Botha and Basil Botha and Michael Hefford, which I have told Vinod Sethi, Saradi Rajan in writing even before one paper of FTR could come down. And this is all in writing. It is in an email format given, documented. Okay. Listen, FTR today, okay, is a near about shell company. Okay. If you bring a huge asset like Nordic Mines and dump it into FTR, okay, it will be considered by Toronto Stock Exchange, like any respected global exchange, as a backdoor listing. Okay. In a backdoor listing, all right, you don't have many takers. The currency creation in backdoor listing assets is not there. I mean, you would have to then market the company to institutional investors. You have to create the momentum in trading. You have to create it into a currency. So what Toronto Stock Exchange says, and with any respectable stock exchange will say, okay, and I'm telling you by experience because I've done a couple of deals in NASDAQ, when NASDAQ has come around and said the same thing, okay. If you do backdoor listings of this sort, at the end of the day, the exchange keeps you under observation for 6 months. Okay, because the simple question that the exchange asks, and any investor, any institution will ask, okay, is why the hell are you doing backdoor listing? Why can't you do a fresh listing? Okay, and when you go to reason or backdoor listings, the concept of backdoor listing is, hey, it saves us cost, it saves us time. Absolute nonsense. Okay, it doesn't save time, because the same time of 6 months what is taken to, if you're put under observation for 6 months, why don't you go and freshly list in 6 months? Okay, there could be some argument in costs of listing. Maybe the backdoor listing is slightly on the cost front will be cheaper off, okay, than fresh listing, but the advantages of fresh listing outweigh that cost. So people generally don't do backdoor listings. Otherwise, can somebody tell me in this whole wide world how many examples are there when people have backdoor listed their assets and they've actually created a currency out of it? Okay, so that is the problem. Okay, the problem is that problem is the whole efficiency of putting an elephant asset, okay, like Nordic Mines, 5,000 hectares, okay, 20,000 kilos of gold, at least as of today basis, a $21 to $22 million processing plant, okay, all of this, okay, going into a piddly $4 million company, okay, is of course going to face challenges in compliance with any stock exchange. All right. So where is the question of time? He 4 months has passed, 3.5 months to passed out since we met him. All right. We have already in September. The gentleman wants to do the deal in October. It's already 6 months. You could have done a fresh listing out of it. You could have done the deal in Nomi. Why didn't you do the deal in Nomi? So time is nonsense. Time is an excuse. Time is an excuse. The reason for not doing the deal in Nomi, according to me, has got nothing to do with time. Okay, it's got nothing to do with cost. It's got nothing to do with liabilities also, to be honest with you. Okay, it is a very simple deal. He goes to Nordic Mines. Okay, he says that as any other investor, he says, I want to put $15 million and I want to take 51% of the company. NASDAQ will say, fair enough, take 51%, but you need to give a takeover exemption. You have to kind of bid for 100%. And if at all you don't want to bid for 100%, you go for an exemption, and 99% of the chances he gets an exemption. We got an exemption. When Lao Tzu took 61.5% of the company, how did he get 61.5%? We got 61.5% out of an exemption. Okay, fine, we were fined by some 1 million krona, but 51% was given to us, 10% was fine, 51% we were exempted, clearly. So what stops Fire Steel Resources to go down to Nordic Mines and say that we want we want to put $15 million and give us 51% and take an exemption? It's a close to 2-month deal. It's no rocket science. He can even do the deal in rights issue. Even whilst the rights issue is going on, he can do the deal. We did the deal. Lao Tzu did the deal, taking 61.5% of the company when rights issue failed. The rights issue was an unsecured rights issue of $8 million. And I think they filled up 3 million. The gap was of 5 million. So the board directed the issue to us. And we got an exemption in a matter of 2 hours. The same Hans Andreasson is in the board, got us an exemption in 2 hours. So what is this nonsense about? It's, you know, the world of deal making, the more you complicate, okay, the more there are other reasons. Let's clear up our mind. Let's simplicate. Let's not complicate. The more you complicate, the more suspicions we'll get. Simplicate it for us. Why can't you do the deal in Nomi? Okay, now he talks about liabilities. What liabilities are there in Nomi? All the Nomi liabilities that are there in the group company are artificial liabilities. Completely artificial liabilities being created in the last 2 months to screw around with Nomi, to mess around with Nomi. Simple as that. There are ulterior motives with Nomi as a shell company. There is an intentional motivation to take Nomi bankrupt. This is my analysis. All the debts in the company, there is only one genuine debt. The genuine debt is Nordic Mines Marknad, okay, which is operating under a composition plan. All other debts are completely hocus pocus. They're bogus debts. Some Saraji Rajan from Legacy Hill Resources, some 5 million kroners, some Lindahl $250,000, Manhammer Swartling $250,000. I am privy to the mandates. I have seen the mandates. The mandates are there with me. Saraji Rajan was on a $250,000 contract for a year. $250,000 contract for a year. Okay. Last 3 months before he quit, okay, he has put up a fat 5 million kroner bill. Okay. Lindahl, $50,000 to manage the rights issue. $250,000. Manhammer Swartling, $250,000. I have clearly told the board, very clearly, the board had approached me to become the CEO of the company. Okay. I have clearly told the board in no uncertain words that they wanted to even publish my name. Okay. And I said that, listen, I don't mind you publishing my name, but I and the board should be in synchronization with each other in terms of what the CEO wants to do. And this thing about the group debts was told to me by Tourbillon Bigde, who is the CEO for the company. Okay. I said that, listen, I cannot, these debts have to be haircutted by at least 80%. 20% is genuine. I'll pay 20% cash. I will go down to each of these guys and say haircut of 80%, period. Okay. And 20% and 20% I'll give you cash. That's it. Finish it off. There is no group debt which is as ingenuine as what exists today. Today, the only debt is Nordic Mines Marknad, which is to me hardly a debt. Hardly a debt. Okay. So there is this thing about liabilities and I would like to have an open discussion with the board, FTR, and what is this thing about liabilities? Why is it being over proportionately bludgeoned to be a Mount Himalaya? There is nothing. There is an artificial debt created by vested interests at the group company. There is one genuine debt, which is Marknad, which I am ready to clear off. I am ready to clear off Marknad debt in a matter of 24 hours, provided the board cooperates in understanding that there is no group debt. Saraji Rajan cannot put a 5 million Swedish krona debt out of his ass. Okay, let's be very clear about it. Okay, so this thing about not doing the deal in Nomi is nonsense. And by the way, whenever I do conferences of this sort with the shareholders, I get Vinod Sethi's calls. And by the way, this is Vinod Sethi calling me up. And I guess I don't know why people get a bit worried when I do webinars with shareholders. I think they should be very happy that shareholders are being discussed with. So it's I think it's 1 second. Let me just take Vinod's call here. Yeah, Vinod. Yeah, Vinod. Ha, Vinod. Vinod, I'm talking to the shareholders. Yeah. Can I give you a call after some time? There's a webinar that's going on. Vinod, there's a webinar that's going on. Can I give you a call after some time? There is a webinar where I'm talking to the shareholders. Can I give you a call after some time after the webinar gets over? Okay, so fair enough. Okay, so this not doing deal in Nomi is the single biggest reason, a single biggest reason, okay, why FTR today, at least as far as Lao Tzu is concerned, is not being taken seriously. Single big. For your information, okay, the board was very when the chairman went and discussed this. The chairman told me, okay, very clearly that Pranay, one of the biggest concerns of the board, that is the new board, all right, is to figure out why is FTR not doing the deal in Nomi. They were very clear with the fact that they would compel, they would request, and they would place their earnest and honest intentions in front of FTR to do the deal in Nomi. But it's the same old rigmarole reasons, okay, the same old patent reasons, okay, which I think it's high time that FTR should understand that Sweden is a mature deal-making world. There are mature deal makers who can understand what's really going on. Okay, so let's stop all these kindergarten reasons of not doing the deal in Nomi. They're literally kindergarten reasons. Okay, fair enough. Then I think there is a very important analysis that FTR has done on the valuation of the company. He's bantied around so many figures: $10 million, $150 million, $20 an ounce. As much as I would have a field day. I would have a field day with FTR on valuations. Field day. Okay, I mean they can entertain me on valuation. Simple as that. This is like a La La Land. It does not even merit a 2-minute discussion. Okay, and I will just break this argument by saying that according to me, facts and numbers. According to me, facts and numbers on documents presented by FTR, facts and numbers presented by FTR, unless and until Michael and Basil don't understand the numbers that they've written in the papers, they themselves have written in the papers, okay, signed the papers, okay. These are the numbers that they have culled out from thin air into the documents. According to the figures, okay, the minimum valuation, the valuation range that Michael Hepworth and Basil both have in their head. This is an important differentiation. An experienced valuator will differentiate between what is going on in your head and what you're marketing. Okay, he in his head. I can prove it by figures and facts at the EGM, okay, that his valuation range is between minimum, okay, is in the range of 0.60 to 1 SEK. His valuation, okay, and he's giving us a valuation of somewhat $12 million in total, okay. I mean, this is he is giving himself a valuation. I mean, listen, okay, the valuation range factually that he is giving, or he is analyzing, or he is basically submitting in his own mind, which he's not marketing to the public, is between is around about 0.72 sec to 1 sec. And I will, the scope of this discussion in the webinar is highly limited to discussing that. I will definitely like to take this subject up with FTR at the EGM as to how he says that the value is $12 million, wherein the papers are proving that he is at least giving around about 0.72 sec per share, which would be something around what? Something around $50 million or $55 million. So he's giving a valuation of $50 million to himself by the figures that he's putting on the papers. Okay, a minimum, because there are certain assumptions that I have to make post that minimum. Okay, he's giving a $50 million to himself. Okay, because there are lots of things which are unclear in his papers. All right, so the things which are clear, I can say that he's getting $50 million, and to the public he's saying $12 million. So again, I mean, the basis for the value, and the basis for the value is some CASI research, big deal. Okay, the basis for valuation is the stock markets. Please go down and take historical data from the stock markets. Please, CASI research. Okay, should I bring out a $100 million valuation from every bank and place it in front of CASI research? Come on. We all know how CASI research is, and the investment bankers do the valuation. I can challenge you for it that at this point in time, okay, I can produce a valuation report by an external advisor, which will be no lesser than $50 million. Okay, so timeline to production. But this is again, I mean, listen, the documents that he has submitted somewhere down the line gives an impression that he's producing gold 19th of January. He's producing gold 19th of January 2019 is the first batch of production. Okay, the last that I heard of Michael talking to the shareholders was something like 4 months back, where he was banting around with thumping his chest on the fact that he's going to produce gold in 6 months, which was laughed upon by the board, okay, laughed upon by me, laughed upon by the shareholders. And now he's producing documents, okay, where he's writing and he's signing documents where the gold production according to the signed documents in 19th January 2019. When is 19th January 2019? 1.5 years from now. Okay, and then again he says over here, given the work we have done, we believe it will take 6 and 9 months. But Michael, your documents are saying that you're going to produce gold on the 19th of Jan 2019, unless and until I am blind. Okay, so FTR trading halt. Listen, I don't want to get into the internal analysis of why FTR has been halted on trading. Whatever that he writes may be correct, or but I can only say that, Michael, please don't at least personify in your website that you have already taken Nordic Mines over. Your whole website is only talking about Nordic Mines when the deal is not even complete. What kind of compliance, what kind of maturity is this? That you go down and the whole, if you go down to FTR, it's nothing but Nordic Mines. It has been personified as Nordic Mines. They've already presumed that the deal has been done. I mean, but literally speaking, it's a shell company. That's the reason why I think TSX does not, pay too much of attention to it. Had this been a matured company, nobody would have allowed you to do this. Your deal is far from over. There are no documents. The deal is far. Today you are basically, might I say, even forcing the board, threatening the board to the extent to sign your. How dare you put all information of Nordic Mines on your website, personifying that you already bloody got the deal? Nonsense. It's trite, complete trite. Immaturity of the highest caliber. And this is the promoter that I want to get associated with and giving 51%. Okay. That's all that I want to say. Okay, and of course, Toronto Stock Exchange will ask, where is the JV agreement? Where is your financing agreement? Where is your? Of course, they will ask. When you have not produced anything, you go down and tum-tum beating the drums that we have already taken the bloody deal, marketing your site as a Nordic Mines website. Take out all that bloody Nordic Mines material from your website. Everything. What right do you have? At the most, you put $0.8 million, which is even lesser than the total debt that I have in the company. At $0.8 million, you're personifying that you're an owner of the company. Management team and board. Let me not get into that. All that I want to say is that, with due respect to Basil Botha, I mean, I'm pretty sure that they are experienced people in the mining business. Fair enough. The only point that I want to make over here is that if at all we are not doing the deal in FTR, sooner or later, I believe this question has also been asked as to, okay, fine. So Pranay, where is your team? Okay, you know, has Lao Tzu got a team and blah blah blah. Okay, if I if I do man-to-man comparison, okay, on the team that FTR is marketing, which is Michael Hepworth, Paul Sargent, David Forrest, Peter Pollard, and Greg Sparks. I can tell you very clearly that man-to-man comparison, which I will announce at the EGM. My team, it is, I would say, there is no big deal. Or I mean, man-to-man with Paul Sargent, man-to-man with Michael Hepworth, man-to-man with Botha. All the profiles that you will see, okay, is as good or as bad as one sees. So I don't want to comment on this, except for the fact that if this is what is required to create a team, then no big deal. All right. So fine. Christian, I will answer the question. So let me just. So fine. So I think that's it. I don't think so. There is anything else that they have written. Something. Okay. And then of course it goes down to Greg Sparks. Some technical NI 43101 reports. I mean, again, as I said, I rate these guys as kindergarten guys. Okay, there's a right word into inverted commas. Kindergarten guys, okay, at the fag end of their careers. All right. You want me to make my investment proposal on NH10 or PH20 or I mean. Greg Sparks has produced one report from John Boyd. Let's respect that. That report has been presented to FTR for FTR. Okay. It has not been presented to FTR, okay, for Nordic Mines investors. It has been presented to FTR for FTR. Okay. Leave it at that. You mean to say that Nordic Mines has hatched eggs for 1.5 years, not producing reports which are at threshold levels to yours from equivalent and more reputed or as reputed advisors as John Boyd. Okay, I have already what the data that I have from Legacy Hill Resources as the CEO of the company, and the data that I have from John Arthur, who was representing and who was partnering SRK, is already there in the marketplace. So let's not banty around with NH101 and so on and so forth. And even after taking all those reports, okay, I am not basing my business case on these reports. Okay, 2011 to 2016, the one-line analysis is very, very clear, and I respect Legacy Hill Resources for that. The one-line analysis, too much on over-dependence on technical reports. As far as Lao Tzu is concerned, Lao Tzu is not dependent upon technical reports for its investment case. And I will come down to that later on as my presentation goes on. So, so let's not, as I said, into inverted commas, kindergarten. Kindergarten at the ripe age of 62 to 65. Fag end of their careers. Don't get on to technical reports and base technical reports as a source of your all prevailing picture of how you want to analyze Nordic Mines. So your technical reports are saying it is $12 million, is it? Your technical reports are saying that 600,000 resources is the figure that you want to base your valuation on, is it? Your technical report is telling it it's $12 million. Is that what it is? Okay, Lao Tzu proposal. He has gone down. First of all, Dynacor is the benchmark company. Now, listen, okay. At some point in time, I have to draw a line. At some point in time, I have to draw a line between telling a student, okay, telling a student of how to do benchmark on valuations, okay, and telling a person who's failed in his class 5 times. I mean, did I ever say in any of my presentation that this is a company that is demerged? There is nothing to demerge in this company. What will they demerge? The company has been benchmarked to prove what is the business model of processing plant companies which do tolling and what is the possible benchmark valuations of it. Okay, and he's going at the, if you see Dynacor today essentially tolls, aggregates, mines gold from all these small time miners from Peru. To that extent, it is good. All that I'm saying, there is a balance sheet, there is a valuation, and then there is a cash flow, and then there is a P&L, and there are multiples. All right. The only thing that if I take those multiples, if I take the size of the processing plant, if I see how much I can supply to the processing plant, I would say that I can derive the same kind of valuation for the processing plant business in the event of demerger, like a Dynacor. Dynacor has got nothing to, there is no asset in Dynacor apart from the processing plant and the other, the tolling business that they're there. They don't have any assets to demerge. So what will they demerge? Okay, they've got an exploration business, is hardly a business. All right. So this is a hardcore financial exercise. Please get down to enterprise valuation. Okay, I am basically analyzing the enterprise value of Dynacor, benchmarking it against a demerged company, if at all it gets demerged in the form of a processing plant, if they were to do the same business. Yes, I can only respect one thing that these guys have said is that what is the the tolling part, okay, that there is no tolling within these many meters and etc. etc. My simple analysis is very clear. My simple analysis, okay, again, don't complicate. How much gold post demerger? How much gold? Again, reiterate 100 times. Post demerger. Okay, when you say post demerger, means that the economics of the mine changes post demerger. Post demerger, what is the volume of business that the mine can give the processing plant? All right, and I think that can be benchmarked to the volume of business Dynacor gets only from Laiva. Now, coming back to getting mine from the other mines. Listen, guys, this is a very sensitive topic. I think when Michael was at the peak of fighting this out, Krister Södermalm, okay, or I believe the board, okay, not Krister, I'm so sorry, I'll take not the board, the management somewhere. They have taken out some license, okay, from the municipality of wherever Laiva is, okay, wherein they say that, you know, we can only give you some 0.2% of gold process from the other mines and all. Firstly, okay, all shareholders, literally, seriously, and this is something that I would request all shareholders to do. Go down to the 2013 annual report. 2013 annual report, Lao Tzu was not there. Okay. 2013 annual report. Okay. Just go down to the 2013 annual report and see what the board and management says. It's 2013. Okay. The management and the board, in conjunction with Evli Bank, all right, were basically analyzing the same thing that we are analyzing today. Equity cash was getting burnt out. roadmap to bankruptcy was very clear. There was a 45 million euro outstanding debt to UniCredit Bank. They knew that they had to do something, okay, change the business model, alter the business model in doing something constructive and productive. 2013 annual report has a 1-page dedicated on the board and the management then talking about putting the processing plant for tolling gold from the other mines. And they have said that we have talked to the other mines and the potential for tolling is very huge. 2013. Pranay Panda is not inventing this. This has already been discussed, thought over, diligenced by El Dorado at that. El Dorado was a $40 million strategic investor. Okay, El Dorado, the 10th biggest gold miner in the world, had put in $40 million for 12% of or 30% of Nordic Mines, along with the board and the management of Nordic Mines, which Christos Adamov fails to remember. The annual report is suggesting very clearly in black and white, 1 page dedicated as to why the processing plant should go and take do tolling from gold available from other mines. I have myself gone down and visited, all right, 2 mines, Dragon Mine and Biogdal Mine. Okay, Dragon Mines, we spent 2 days with Brett, the CEO, all right. We saw their entire operations not only in Sweden, but also in Finland, okay. In Sweden, they have a processing plant, the size of which is 25% of our plant, which is much smaller than our plant. And when Svartliden, okay, it's based in Svartliden. All of us know, okay, that Dragon Mine acquired the leftovers of Lapland gold mine. All right. So when they picked up Fäbodliden property was acquired in bankruptcy by Dragon Mine. So Fäbodliden is basically an exploration asset today. The entire valuation of Dragon Mines today is based on the success of Fäbodliden. Fäbodliden is a non-producing asset. So what Svartliden was dying off in gold. Gold was not there. Gold production had stopped. What would they do with that processing plant on the ground? So what they did was they started tolling gold. They started tolling gold from Biogdal gold mines, from their own gold mines in Finland, and from Endo mines. And in total, I think they were basically processing something like 1,800 to 2,000. Pardon my figures, but somewhere around that range. They were processing the gold from these 3 mines. Somewhere around 1,000 kilos from Biogdal, another 1,000 kilos or 800 kilos from their own mines, and about 500 to 600 kilos from Endo mines. They could do that because they had a multiple license. When they established that processing plant, they had applied for a multiple license. Okay, multiple license simply means that they are qualified to go and toll gold from other mines as well. We did not have a multiple license. We had a single license only to process Laiva gold. All right. And for 3 to 4 years, Dragon Mine's balance sheet was only producing profits through that tolling business that they were doing in the processing plant. Okay, I don't know the stake now because Endo Mines has stopped its production, and I do not know whether the same arrangements with Biogdal lies or not. But I'm 100% sure they are still processing the concentrate that is coming out of Biogdal. So if a small processing plant like Dragon Mine can do it, okay, from 3 mines, how can FTR say that there is no gold in and around Laiva? It's a figment of their own imagination. I have talked to the CEO of Dragon Mines, and the CEO of Dragon Mines has told me very categorically that Laiva today, as far as Dragon Mine is concerned, is at an economical trucking distance, to process gold. And they will be happy to do that. They will be happy to do that. I've spoken to Shell Larsen, who says that apart from road, there are much more efficient water routes, sea routes, which is even better than trucking. Okay, so economical trucking distances or transportation distances is absolutely not a problem as far as tolling gold is concerned from other mines. I've been given a very clear message by Dragon Mines saying that they can do it. Their problem was, Pranay, how the hell are you going to turn this asset around with such a fat, inefficient processing plant on the ground? They were saying that giving you the gold is not a problem. How would you make this efficient? God damn it. Do you have a business case with you? And they're right. The entire Nordic mines community, not the entire Nordic mining community, knows exactly what the problem is. The problem is the processing plant. The problem is not the mine. The mine is as what it is. The mine can be incrementally improved by here and there. Okay. The drastic, what I say, the big bang. The big bang efficiency will only come out from this processing plant. Take it or leave it. All right. Okay. So it is our belief that Laiva can 1,000. All rest of the other things I don't want to get into is because what Michael says and what he produces in documents is basically a difference between Stureplan and Manhattan. Okay, or to take a tourist to Stureplan and say this is Rome. Okay, so I don't want to get into these $1,740. You please show me what is your solution. Okay, everybody knows that there is the cash cost have been high. What is your solution? Your solution is blasting and showing efficiency of 0.8 grams to 1.8 grams is basically says 125% increase. Even a gentleman like Krista Sutterman, who's against Lao Tzu, who's against Pranay Pandey, is saying that I can bet every salary of my board of directors if this guy can produce upgrade 0.8 to 1.8 grams on blasting, as if the 10th biggest gold miner in the world, which is El Dorado, after spending $40 million at a market capitalization of $300 million, taking 12% of the company. Okay, he has not understood that, oh, we have lost my money. I should do efficient blasting to bring it from 0.8 to 1.8. What as a result of all this diligence that El Dorado has done, they reached a conclusion that it is much better not to even put $1, okay, and lose $40 million. Okay, blasting. I mean, listen, anybody who understands a bit about how to value excess, there is no way on earth, whether it is blasting or whether it is sorting, where we can get a breakthrough efficiency where 0.6 grams per ton to 0.9 grams per ton cutoff range can go down to 1.8 grams per ton. Come on, guys. Mining efficiency is not going to turn this asset around. This turnaround is not a mining case. It is an asset restructuring case. It is a business case. It is a business case that will lead to the biggest problem since 2012 to 2015 has been that everybody has tried to create a business model through a mining model. So, let me not confuse, but it is a mining-led business model. Okay, that is where the problem is. Guys, shift the gear, shift the approach, think out of the box, think about the business-led mining model. What is your business model? Don't give me a mining model. Give me a fucking business model. Okay, so that is, and there is no business. Okay, you might say demerger is a wrong model. Fair enough. Criticism is valid. Criticism is acceptable. But at least it's an effort towards creating a business model. I mean, where is your business model? Blasting will reach 0.8. That's a mining model. That's not a. I'm interested in a business model. Give me a business model. Okay. So that's That's as far as their responses are concerned. Now let's get down to FTR transaction. Okay.
Yeah, sure. Go on.
Okay. Yeah. So let's get down to the FTR transaction. See, I'm getting a lot of these. I think there is one guy, Carlito, Mr. Pranay Panda. Would you please present track record for yourself and what previous mining experience you got? What demergers and previous business you've actively done and involved in?
But if you want, you can take it later. Just go on.
See, all of this. Who's the Mr. The Miner, Carito Miner? All this question will be answered at the EGM, and the reason why I want to answer this at the EGM, because that is a legal event. Okay. But let me answer your question in a very common sense, from a perspective of human common sense. Okay. You see, when I'm doing demerger, Mr. Miner, I'm putting my money behind it. Okay. I'm putting my risk behind it. You get my point? I'm putting my money behind it. I'm doing my rights issue, which is majoritively underwritten by Lao Tzu, or will be underwritten by Lao Tzu. So I'm not an idiot to go down and do a demerger and blow my cash off. I'm putting my money where the mouth is. All right. Rest of the questions on credibility, whether I've done demerger or not, very valid question. Wait for the EGM. Fantastic answer will be given to you. No problems at all. I will tell you how many demergers I've done. I'll tell you what I understand of mergers and acquisition. I'll tell you what I understand of values. That is my core field. I will make you explain on that. Okay, now previous mining experience. I don't have any previous mining experience. Zero. I don't have any mining experience. I have investment banking, fundraising, asset restructuring, private equity advisory. I am a financial guy. When a financial guy takes the investment stream to a particular direction, he buys out the team. For me, buying a team is to give a check. Okay, I am not over here to prove whether I'm a miner or not. I'm over here to give Peter Kuiper his salaries and tell him bloody well perform, and Krishna Sadamam his salaries and tell him bloody well perform. If you don't perform, that's the way out. As an investor, I should have the network, okay, to get the right team. How do you presuppose that I don't have a team which is much better than what FTR is proposing? How do you presuppose that? How do you assume that? So please come to the EGM and your assumptions will be put to ground as to what is the team and what should be the team. 99% of all the problems with gold mining and mining in general is because half of these jokers called the miners only understand the mining part of the world. They don't understand the finance part of the world. The mines that have been tremendously successful in this last 3 to 4 years, when gold prices were going down, but the gold were depressed, were the guys who could understand the nuance of finance, the nuance of valuation, the nuance of NPV. Today, we don't have anybody in the board. We don't have anybody in the management. FTR has nobody in the management, nobody in the board, neither the Nordic Mines, which has got a team, okay, which has got a team which describes the mining model from an NPV perspective, from a business valuation perspective, because that's what I'm bothered about. I'm a shareholder. I'm bothered about what is the share price that gets struck at the counter at NASDAQ OMX. Okay, I'm not over here to boast that I'm a miner. Okay, I know what I am. Okay, I am a valuator. I'm a hardcore finance guy, and I will prove it to you. I will prove it to you. Okay, that's all that you need. That's all. You need a bunch of very smart financial guys. You don't require miners. Miners can be hired. Miners can be hired at 60,000 kronas a month. Don't worry on that. Okay. So let's and if the rights issue is going to be done, if the demerger is going to be done, I'm telling you very categorically that today's board in Nordic Mines is hopeless. Today's management team in Nordic Mines is hopeless. They understand the shit about demerger. For demerger, you have to get high-end people who have executed demerger from the McKinsey and the Bains of the world. Okay? From the McKinseys and the Bains of the world, people who understand what it requires to reward the shareholders from a valuation perspective. Okay, that's the right way to approach. Today, for everybody's today, listen, you guys don't want to do demerger. Give me reasons for it. Oil and gas industry has made money because they have made money through the. I mean, what shit? What crap are you talking? Have you even gone through my presentation as to why am I saying that the NPV of the two businesses is much higher than one business? Sum of the parts is much greater than the whole. If the sum of the parts is not greater than the whole, why the hell will you do a demerger? And whether I'm correct on whether the sum of the parts is greater than the whole or not will be proved in the demerger prospectus that will be created by a Deloitte or a KPMG or a PricewaterhouseCoopers or an Ernst & Young. It will be placed in front of the shareholders where the pro forma of the two companies will be placed side by side to make sure what is the business case. The business case is very clear. 1 share of the mining company plus 1 share of the processing plant company is not only bigger, it is much higher than 1 company of Nordic Mines. Much higher. I have proved that in 1 slide in my presentation. Okay. And as in how the EGM comes, I will give you how a pro forma balance sheet looks like. Mr. FTR, can you at least give us a pro forma balance sheet of your business model? Leave apart giving technical study. What is the pro forma business? Where is the pro forma? Give us a pro forma balance sheet for the next 3 or 4 years. Okay. So that is where we are. Okay. Now let's get on to FTR. Yes, Miner, this is Carilito, the Miner. The last question that taking from you, Miner, because there are other issues that I want to cover. According to me, it is not a mining issue. I'm shameless in saying that. It is not a mining issue. It is a business. It is a business issue, not a mining issue. If at all you can understand the difference. The difference between a mining and a business. If you don't understand the difference in a mining issue and come down to the EGM, that is where you are facing a problem. There is a difference between, okay, let's take it this way. All right. Technology, business. All right. You invent a technology, but does that mean that you have a business? Okay. Most of the technology driven businesses have failed, but most of the business led technology companies have succeeded. The same way, it's a corollary. It may not be the same way. I don't think so. It's a mining problem. In the sense that I don't think so. Even if at all you fix up the mining issues, okay, anything earth shattering is going to happen with this mine. You're going to revisit 2013 again. At the most, you're going to waste equity, cash, or shareholders. Buy some time. You're going to revisit bankruptcy again. 2000. If you put $15 million, okay, without really understanding how and where you want to put the money, what is your business model? What is your business case at the end of the day? All right. How are you economizing the mine? I don't think so. You will see the light of the day on the mine. Okay. At least I think you'll be revisiting 2013 again. You'll be blowing up your cash. You are just kicking the can. You're kicking the can. You're delaying bankruptcy. You're delaying bankruptcy. For me today, I have told the board as recent as yesterday that the FTR deal is a bankrupt deal to me. For me, it is kicking the can. Markets are highly intelligent entities. highly intelligent entities. Okay, let's not argue foolishly. The moment you put these documents in front of the market, you will see that the market will bring down the valuation to such a level where it will be a tight slap to all us as investors who have believed in FTR. Simple. Markets will punish us on this deal. Markets will punish the investors on this deal. The markets will punish the investors on the deal if the demerger prospectus is formulated properly, communicated properly and professionally. The markets will reward you. Because okay, I can tell you with full confidence that half the problems of Nordic Mines could have been avoided. Half the problems, okay, if they would have just listened to Lao Tzu, and this is all documented. All right, the markets, if you see and observe the markets carefully, if you see the price action of markets, see the price action ever since we took the asset to up till now. See where the stock prices fell down, see when it rose up. Do an analysis. This is an analytical fact that I'm making, that the markets, whether demerger or no demerger, the markets are trying to tell us, guys, if at all at today's price of $1,300 an ounce, you have to show us profitability at $1,080 an ounce. I am not saying it. Markets are saying it. Statistically, I can bring those numbers at the EGM and prove it, that unless and until you do not show enough safety margins at $1,080 an ounce, there is no way on earth will you get the real unlocking of this asset. Okay, so doing that. All right. Coming down to comments of FTR legal and transaction structure. Okay. Before I get down to the comments on the transaction structure, legal and transaction structure, okay, I want to say that what I am going to now extrapolate has got nothing to do with the efficiency of FTR, because efficiency of FTR can only be analyzed if he does the deal in Nordic Mines. If he does the deal in Nordic Mines, even after that, any kind of rights issue is better than this so-called FTR deal. Again, common sense. Do you think that risk is risk, right? Okay. When NOMI shareholders want rights, when NOMI shareholders want to participate in rights, what does that mean? It means that these small shareholders at the end of the day, including Lao Tzu, we are putting a risk money onto the game. All right. When you put risk money, okay, when you put risk money onto the game, you're putting that risk money after analyzing the FTR deal, right? After analyzing whether FTR is going to give us $100 or rights issue is going to give us $150. Okay, you mean to say that a mad dog has bitten Lao Tzu, or a mad dog has bitten the small shareholder? They will run and put risk money without analyzing FTR. FTR deal, even if at all he does the deal in NOMI, is an inefficient deal. The reason I'm saying that he should do the deal in NOMI, because that's the only way he can surface out. It can surface out as a legal deal, surface out as a legally audited deal, surface out as a deal that can be efficiently analyzed. Today I can't even analyze. It's a joke. I don't want to spend more than 5 minutes on this bloody joke. All right. Okay. So the comments of FTR legal and transaction structure, this is what it is. I will post this presentation later during the day or tomorrow. But I will take you through 2 or 3 slides. Okay. FTR transaction. Okay. FTR transaction structure. These are the gaps. Okay. These are the gaps based on the papers that I've got. Okay. I have mentioned it to the board. The board acknowledges it. Period. Full stop. Okay. The board's logic is there is no other better deal. And I've told the board, if that's what you think, please come down at the EGM. Please come down at the EGM and let's see what is the better deal. Okay. The board is completely cooperating with FTR. Completely cooperating with FTR. They have a bias towards FTR. Seriously, I have very clearly, pronouncedly asked the board: is this what you are supporting? I mean, when I'm showing you the numbers, is this what you're supporting? Yes, because there is no other better deal. Okay, okay, if that is the case, a rights issue was passed 2 months back, 60 days back. Okay, why didn't we do rights? Why do we have to wait 60 days? So, I mean, isn't there a pattern? Wherever rights issue comes onto the table, there is an incessant, unstoppable delay that is happening. Why can't you allow us to do rights and then let's meet after 6 months? The simple reason is rights issue fundamentally increases the valuation of the asset. If I pick up $8 million out of the asset, rights issue picks up the valuation of the asset, and that destroys the FTR deal because the cost of entry for FTR is very high. It will come, he would have to enter somewhere around 0.55 to 0.060 SEK and not $12 million. No, he will have to enter at 0.60 SEK, which is around about $50 million roughly. And that is the reason why it is very simple. That is the reason why probably the board is supporting FTR, because they don't want rights issue to increase their valuation. Allow us to do rights, please. Beg of you, don't waste our time. Allow us to do rights, wait for 6 months and let FTR come in. Why can't FTR come in post rights? The most recent JV agreement that I have seen, which has come as recent as Friday to me, is where I should appreciate Hans. I think he's done a good job. He has tried to make rights issue and FTR coexist. See, guys, technically and legally, let's face it. See, FTR is, even if at all, one were to sympathize with this idiotic structure that they have bought out of thin air. Okay, it is being done in Nordic Mines market. All right. So what Hans Andreasson has achieved, which I put it in writing to him, and I said that, thanks, boss. I mean, you've done this is productive work. What he has done is that he has made rights issue and FTR coexist, because rights issue is in the mother company. It is in the parent company. Okay. It is in Nordic Mines, whereas FTR is in Nordic Mines Mark now. So I told him that the problem still exists. He said, Pranay, what is the problem that still exists? I said, the problem that exists is very serious. Rights issue picks up equity, genuine risk capital, which has got no frills attached to it. I put that $8 million into the joint venture. I'm not bothered whatever shares, whatever pro rata shares I get. Okay. But conceptually, I'm putting risk capital into JV. Is FTR's capital risk capital? He said, yes, it is risk capital. He's putting risk capital and taking 51%. I said, if that is the case, then I agree with you. But if that is not the case, okay, then what do you do, Hans? Because what FTR is doing, okay, FTR has got an external financer. Let's not get into names. Let's conceptually understand what the transaction is. Conceptually, there is a financer who lends money to FTR. Okay, so he lends the money. He lends $15 million to FTR, and there is a cost of this loan, and the cost of the loan, as per the document, is around about $30 million in 4 months, in 40 months, starting January 2019 to something like 2000, I think Jan 2022 or March or June 2022, 40 months, the cost of $15 million is $30 million. That is being accrued as in the form of 38% discount to London Metal Exchange prices. 38%, $500 an ounce, 1,937 kilos. If I do the maths, 38% discount. Only on that figure, this entire document will go through it will be kicked off in a sensible society. A pre-financing agreement, okay, wherein India is a master in that, because the Indian gold trading community knows nothing but trading. Okay, the maximum gold discounts that can go on pre-financing is around about 3% to 6%, and that is what Mr. FTR you should look at. Dynacor. You should look at Dynacor. What I'm trying to tell the shareholders is, what is the business model of Dynacor? What does it do? How does it get pre-financed? How does it process? What does it process? And what is their margins? The margins is 3%. In India as well, if I do my demerger will have an investor who will do gold processing in the processing plant at no lesser than 3%. Where is 3% and where is 38%? Okay, leave apart the semantics. Let's get down to legalities. All right. So he gets $15 million into the books of FTR. Now, what does a smart man do? He takes that $15 million and he puts it into Nordic Mines as equity. Fantastic, no problem, no problems at all. And then he tells the Nordic Mines shareholders, Mr. Shareholders, I want $15 million. Here is the $15 million. The cost of it is 51%. Assume for one that all the shareholders agree to it and say, Mr. FTR, take 51%. Okay. Now, when we give them 51%, the transaction is over. You give me $15 million, I give you 51%. Okay. So my question to FTR, how would you pay $30 million to your financer? You have given me $15 million. I have given you 51%. Game over. Go home. Congratulations. Now tell me, how are you going to give $30 million to the financer? Whose cost are you taking $30 million? So the way I see it in the transaction is that the JV agreement, okay, and the what do you call this financing agreement, if you integrate it each other, what is happening is that $30 million over a period of 40 months, which is 3.5 years, is shaved off from the cash flows of Nordic Mines Maknad. How can you do that? We've already given you 51%. You are now shaving off the cash flows of Nordic Mines Maknad and making it your own capital and paying that capital to your financer at the cost of 49% shareholders. And when you do that and you create a pro forma balance sheet, I see that in any given scenario that you look around at, okay, at any given scenario that you look around at, all right, you are literally starving the company, destroying the company of any free cash flow generation, as a result of which sooner or later the market will convert the stock prices to zero. Isn't that what you want to achieve at the end of the day? By shaving off the cash flows by $30 million. Why do you want to do that? What rights do you want to do? I am a JV partner. You are a JV partner. You are 51%. You have been given that. You are a JV partner. You are the JV partner of the net income, not of the bloody gross revenues. So what you do is you generate gross revenues. You create cost of goods sold. Okay. You create an arbitrage of $30 million of cost of goods sold, and you take it into your bloody books and you pay your financer when we've already given you 51%. This is ridiculous. This is completely bloody ridiculous. I want to see KPMG. I want to see an auditor auditing this document. That is the reason I'm saying I want a diligence document. I want a due diligence document, because everything Lao Tzu will say will be biased. I want an Evli Bank. I want a KPMG. I want a legal advisor to go through this document, prepare a diligence document, and let FTR come down. This is basically this document. If the market reads, okay, including the financing document has to be made public. Not only the JV agreement, the financing document as well. Publish both the documents and let's see how the market reacts. The market will read it through and price bankruptcy, converts the stock price to zero. You're taking $30 million of cost of goods sold as capital into your books and settling off your financer when I paid you 51% of your $50. What shit are you talking? You think I'm a bloody fool? How can you do that? How can you even waste my time coming into the EGM? You should not come for the EGM. If at all this is what the truth is. And if this is not what the truth is, please tell me, how are you going to settle $30 million to your financer? And that is the reason why you're not doing the deal in Nomi. That is the reason why you're doing a JV. That is the reason why you don't want to merge Nomi with FTR. Because if you do any of this, you won't be able to do it. That is the reason why you're not doing the deal in Nomi. Not because of TSX, not because of the liabilities. This is the reason. And this is questionable. This is highly questionable. This is on principle that is highly questionable. How dare you bring this deal to us and waste 4 months of ours? 4 months. If this is the deal that you were talking about right from the beginning, do you think I would have wasted even a single second with you and not done rights? I want to ask the board, what has the board done in doing a due diligence of 4 months? If this is the paper, when I asked Vinod Sethi, is this the paper that you discussed? He says, no, this is not what we discussed. This is like complete 360-degree turnaround. Pranay, why don't you just simply do the rights and get it out and over with? Vinod Sethi, the source of bringing FTR on the table, is saying that this is all nonsense. And we are still wasting time with this guy. Still wasting time with this company. Still. For the last 6 months, ever since rights issue concept, the board has not given us one chance to do rights. FTR transaction, 1937 kilos of gold equals $80 million in today's gold prices. 38% discounted gold offtake agreement, which shaves off 38% cash flows on Nordic Mines Marknard, equal to $30 million, is abnormally high and will not pass due diligence test. Pre-financing gold offtake agreements operate at 3% to 6%. To be proven at the EGM, I will bring my gold offtake agreements. Okay, $30 million stripping of Nordic Mines Marknard cash flows in the form of cost of goods sold into FTR balance sheet will not pass due diligence and IFRS audit, and aims at bankruptcy valuation for Nomi shareholders, as there's absolutely no possibility of free cash flow generation in Nordic Mines Marknard. Proposed right now, this is a point. This is a point which I'm now going to take it very seriously with the board and at the EGM. Please pay attention to this. Proposed rights issue with warrants equivalent to $30 million towards all Nomi shareholders instead would be a highly attractive proposition to current Nomi shareholders. It is legal, it will pass audit and protects Nomi shareholders on the value of the shares that they held. Simple meaning, if the board can even discuss of taking out $30 million and giving it to FTR to settle its financer, I am much better off distributing this $30 million to 15,000 shareholders of Nordic Mines. I will do a rights issue of $8 million with warrants of $30 million whatever that comes out to in terms of percentage of shares, distributed to all the 15,000 shareholders, that every single dollar that they put is secured against $30 million of cash. This is what my rights issue is. I didn't want to do that. My rights issue was a risk issue, a risk capital issue, but now I will do it. I will, at EGM, legally market rights with warrants attached equivalent to $30 million. The $30 million, instead of going down to FTR to settle off its financer, we will distribute $30 million through the rights issue to all the 15,000 shareholders. All the 15,000 shareholders. This asset belongs to the shareholders and not the board and FTR. Let's be very clear about it. If FTR has given us a model where you can even think about taking $30 million off, then I will be brave enough in marketing the rights issue now legally. $8 million is the fundraising, all right? Convert my debt into equity, all right? And now $30 million of gold offtake worth discounts will be secured to 15,000 shareholders, including me, including Annalie Enebe, including Matthias, including everybody. $30 million will be distributed. That's it, period, full stop. If you can waste 4 months of our management time, okay, and discuss this idiotic deal with FTR, which is an external shareholder today, okay, you mean to say that I can't implement the same model? And now, by the way, FTR wants to close this deal in 31st of October. This is what the bloody model is. This is what the model is. I will challenge FTR that I will do the deal faster than him. Okay, faster than him. $8 million, $30 million secured. Every shareholder who is participating in rights now will be secured with an underlying asset of $30 million of gold production by way of discounts. And the discount will be 38%. Risk capital contribution prior to gold offtake agreements, absolute key to make. You see what has happened is I would have respected FTR deal if at all they would have marketed or substantiated an efficient debt to equity ratio. You see their debt to equity. So what is happening at the end of the day, you know, guys, he's putting $0.8 million and taking 60% of the company. As if we are the only big bloody fools existing on earth. He's putting $0.8 million as risk capital and taking 60%. That's exactly what the maths is. That's what the maths is. Take it or leave it. When you get the documents, you will also come down to the same conclusion. $0.8 million, 60%. Smartest guy on earth. And this $0.8 million, 60% equation was given to Vinod Sethi and Saradhi Rajan before even FTR could give me one document. Before I could even get 1 inch of any document from the board on FTR, I had said that don't waste your time. This is what he's trying to do. Put that 0.81, do a financial jugglery to a financer and take 60% and take $30 million out. I mean, come on. This is what we have been wasting our time for 4 months. And that is the reason, guys, why I dispassionately become extremely frustrated at what's going on. My frustration is as good as yours. Who wants to put risk money if some genuine investor is coming and taking risk? Only when you analyze that the guy is not taking any risk that you're forced to protect your capital, right? Over here, we're forced to protect our capital because this guy is wasting our time in the last 4 months. This guy is wasting our time. The board is wasting our time. It's a complete bloody mess. Okay. So please, Mr. FTR, if at all you want some respect to this structure, increase your debt to equity ratio. Simple meaning is today your debt to equity ratio, if I calculate, is 0.026 against 1. 0.026 against 1. $0.8 million against $15 million of debt. Okay, so increase that $0.8 million weight. Increase your equity. Bring it to 1:1. Bring your equity to $7.5 million like Nordic Mine shareholders will be doing in rights issue. Then the simple message to you, Mr. FTR, then we won't do the rights. If you increase your risk capital to $7 million, which is equivalent to the right size, we will not do rights. Please increase your risk capital. That is the name of the game. Don't teach us debts. Teach us equity. Teach us risk. Today we are flooded with risk. Today our risk money is in danger. And now I'm basically in the business of convincing the shareholders to put money in such a bloody idiotic asset today, which is ill-governed, which has got an option like FTR, okay? And my pitch to everybody is that, no, this time around, we will not invest in risk. We will invest in a secured capital of $30 million under a belt. Just as the way FTR is doing, 15,000 shareholders, $30 million, $8 million risk capital, pledged against $30 million of assets, gold offtake. That's it. No FTR business. This is exactly what we will do. And let's see in this model who closes the deal faster. You have taken 4 months to close this deal. In an experienced deal making market, Mr. FTR, I would have closed the deal in practically 1 month. If this is what the deal that you're talking about, okay? Please increase your risk capital. Bring the debt equity ratio to a digestible level. 1:1, not 0.026:1. Okay. And if you don't understand what is the meaning of equity to debt ratio and how does it basically play around with risk management, please come down to EGM. I will teach you. Don't worry. Okay. Comments. Okay. Now the second. So the second slide, which I will post all this, but I'll just take it now. Okay. So what is happening, guys, is that in my humble opinion, okay, I think this is a high risk transaction. From the perspective that I don't think so, this will pass audit. You can't pass an audit where you have already taken 51% for 15, and then you take $30 million out of the balance sheet of the company as cost of goods sold because you're a bloody JV partner and pay your financer. You're a JV partner of the net income, not of cost of goods sold, friend. How will you generate $30 million of net income? If you're generating $30 million of net income, that means if at all we have 59%, you're generating $60 million of net income. Do you think in your wildest dreams you will ever generate $60 million of net income? For you to take $30 million as your right? Okay, so I don't think so that will pass on in the first place, unless he does the deal in Nordic Mines. If he does the deal in Nordic Mines, there is a way to do this. I'm not talking about the efficiency of the structure. The efficiency is as bad as taking $30 million. I'm just teaching. I'm teaching FTR. I'm telling him that first come at the legal level. You can only do this if at all you come at Nordic Mines. All the inefficiencies at the legal level and at the audit level is coming because you are not coming into Nordic Mines. You're avoiding it, and you're avoiding it because your transaction is highly risky at the cost of Nomi shareholders. That is the reason why you're not doing it, friend. It is not because of Toronto Stock Exchange and liabilities. Nothing to do with it. All right. Okay. So when I say that this transaction will not pass the IFRS audit, I have already said this. This is rest of the things conceptually I've explained to you what the deal is. All right. Now let me just come back to one slide, which will be my last point in this webinar.
Yeah.
Okay. And which would be basically again, for the nth time. Hang on, guys, just give me 5 minutes. Not 5 minutes, 1 minute. I just got my presentation. All right.
Yeah, sure.
Okay, so okay, so you see, yeah, there you go. Okay, this has been posted. This has been posted to you guys, but you see, if you go to my presentation, okay, and which has already been made public, all right, and go down to slide 11. That is basically the slide, the last before one slide 11 of 12 slides. Okay, you don't have to go through it because you don't have the PPT, but I'll explain it to you. there is a very clear, okay, scenario planning, a decision tree kind of an analysis which is being done on how the demerger business model, in terms of numbers, in terms of financial numbers, translates itself into sum of parts is much greater than the whole. I've put numbers, okay, factually truthful numbers, analyzed my risk, and proven a model wherein the sum of the parts is much greater than the whole. And I have elucidated DynaCore just as a support example as to what kind of business processing plant get into, and if it gets into that kind of business, what is the benchmark valuation that I can underwrite whilst I'm IPOing it. But to reach that stage, my assumption, very importantly, all right, what is a demerger? To understand demergers, you have to understand what is a merger. All right. So today we are in a merged state. We are in an integrated state, wherein the two mines, the two assets, take a portfolio approach. Guys, I don't want to confuse you. This is not a. I will take my word. All this will be elucidated out in very simple language, face to face at the EGM. But at a conceptual level, this is the way it goes. You see, you have to look at Nordic Mines as a portfolio. All right, and in the portfolio there are asset classes. Okay, one is mining. The business of mining is one asset class, which we call as the upstream asset. The downstream asset, okay, is the processing plant. All right, which have a different business profile. It's a different asset class. All right, and possibly a third asset class, the unexplored asset class, which is 2,500 hectares has been explored, and that has resulted in the north and the south pit. But this is a 5,000 hectare property, so the 2,500 hectares which is not yet explored, right? That's another asset class, all right? So look at this as a portfolio, and in my world, that is the solution. In my world, the unlocking of the value will happen once you thread out each of this asset class singularly in front of the market. Somewhere down the line, FTR is emphasizing on the fact that the demerger will increase the operating cost of the two assets. Well, the answer is there in my slide. If you don't understand slide 11, okay, of my presentation, likewise, I have given you questions on due diligence. You can ask me many questions on due diligence on that slide, and I will answer you. But pray to you, at least go through that and try to understand what I've written. Okay? The underlying assumption is that before you do any portfolio demerging or asset class demerging, what you have to understand is what is the efficiency before the demerge. If the efficiency before demerging is lesser than the efficiency after demerging, then do the demerger. If the efficiency of merging or keeping the assets integrated is more than the demerger, then don't demerge. It is a very simple financial formula which has not come out of Panda's ass. It is basically an unlocking value wherein numbers speak for itself. There is no love lost if tomorrow it does not happen. If anybody can prove that the efficiency of the merged asset today in the as if state is greater than the to be state of demerger, I will not do the demerger. The pro forma balance sheet in the demerger prospectus will precisely prove that the efficiency, financial efficiency, operating efficiency, okay, the synergies that are obtained out of demerger, the cost synergies, the valuation synergies, the operating synergies that are extracted out of demerger is much higher in value, okay, than if at all you don't demerge. And that is established in slide 11. What I'm trying to say is, before I do the demerger, I want to achieve a 30% efficiency before doing the demerger. What it simply means that today, as per the current Euro USD rates, all right, the cost, the cash cost, integrated cash cost is somewhere around $1,100, somewhere around that. Okay. Now, and the analytical information that I have after getting the information from the management, which I can share it with everybody, that roughly 50% is the mining cost and 50% is the processing cost. Processing plant cost more, slightly a trifle more than mining cost. Before I do the demerger, I want in the as is state to achieve a 30% or a 20% efficiency. 20% efficiency. That means I want to bring the cost down to an ounce before that. Firstly, how can I do that? Here, various value creation points, okay, but can be easily done. Okay, number one, let's take the guys. Some shareholders, after speaking to John Arthur, who was basically the representative of SRK, after reading his reports, have asked the questions. So, which one is correct, Pranay? Is John Arthur correct, or Gregory Sparks or John Boyd is correct? Okay, because John Arthur from SRK gives a much higher resource statement, cutoff grade between the range of 0.1 to 0.3, and FTR basically is operating at 0.4 for a 600,000 resource. So which one is correct? Okay, and precisely, okay, for me to formulate that answer, honestly speaking, guys, okay, and it has taken me 48 hours. There is this lady called Birte, extremely passionate shareholder, who knows quite a lot about how 600,000 has been reached and how John Arthur has reached. So John Arthur also participated in the discussion. All right, and John Arthur view, and whatever the view is, okay, at least on that respect, I don't want to say whether FTR is wrong or John Arthur is correct, or John Arthur is wrong and FTR is correct. I want to say that I don't want to lay my investment case on this resource statements. I don't want to. Okay, I want to basically understand one thing. Okay, what I want to understand is, how do I achieve 20 to 20% efficiency, mining efficiency, not business efficiency, but mining before the demerger. Before the demerger, there's only mining efficiency. So how do we do that? The management led by Legacy Hill Resources, and I'm stating it as a fact, has spent about a year and a half, okay, along with the present management existing with Peter Kuiper and Peter Finas. And I think in this case, even Krista Sedamam was involved from the board angle. That sorting, okay, sorting was the tool, okay, that was used towards getting that kind of efficiency. All right, I was the Krister, if at all he is there in the conference, I'm pretty much sure, you know, he floats around in this conference quite he or his representative. You see, I have I was the guy, I was the spokesperson who everybody will say was a pain in the bloody butt, okay, in going against sorting. Okay, I said that sorting will not work because I cannot see how a technological tool can essentially turn around the mining process. And I stay put with that. I don't think so. Sorting, like blasting or like any other mining technique, can turn this mine around. But it's surely blasting. I 100%. I mean, FTR, I would like to join hands. I don't know a shit about blasting. Okay, neither I know a shit about sorting. Honestly, all right. But I understand very clearly out of numbers, because that's what I understand. I understand that these are tools to increase efficiency levels, but these are not tools which necessarily will turn around Nordic Mine's fortunes. What do I mean? This 20%, 25%, sorting can seriously, okay. I read from somewhere that FTR said that it does not. Pranay Panda was the guy who broadcasted sorting, and we were all laughing away to glory. Pranay Panda was not even near sorting. Okay, I mean, Pranay Panda was on the other end of sorting, saying that you should not do sorting. All right. So at least at that angle, FTR, you and I are friends. All right. But I'm a changed man. I'm a changed man because I see numbers, and the numbers that came out, well, to be honest, solid numbers. Okay, it proves that if at all we do the remaining work on sorting, it can definitely increase the head grades from 0.8, 0.9 levels to round about 1.2 levels. And guys, please go down to historical head grades. 2012 was 1.1 grams per ton. 2013 was 0.9 grams per ton. So we're basically revolving around trying to economize this mine around 1.1, 1.2 grams level. And that's what my feeling is. My feeling is that any kind of mining efficiencies is believable to take 0.9 to 1.2, but not from 0.9 to 1.8. Come off it. So at 1.1 to 1.2, I believe that sorting is the trick. Credit to Sarathi Rajan and Legacy Hill Resources. I'm wrong. He's correct. He's bloody correct. I didn't understand that. I've understood it now. Why? I understood it after I spoke to Peter Kuiper. Guys, in this conference, let me also tell you one thing where Legacy Hill Resources went wrong. Legacy Hill Resources did not go wrong on what they did with the mine. They did, as I tell you, they did a fantastic job. They did a fantastic job. I was wrong. They did a fantastic job. Okay. Where they went wrong is where I clearly told Sethi and Legacy umpteen number of times that don't put your hands into finance. Don't do something which you don't know how to do, but you think that you can do it. So what he did, guys, and this is where the problem lies. This entire shit about Nordic Mines is on the mining front converges to this simple point that I'm making. That Legacy Hill Resources thought that it could raise funds. It was not their competency. They should have just told the board and Lao Tzu and the shareholders that this is not our cup of tea. We are in over here to do operative mining, not financing the mine. So what happened was, when the company got drained out of cash, Sarathi Rajan was saying that he's got a $5 million ticket size funding available. And he was so confident of it, so confident that when the chairman told me, hey, Pranay, we're getting $5 million, I've got a written statement to the chairman. I said that it will not happen. He told me it is 99% closed. I said 99% of the deals in finance, which is 90% closed, does not close. And that's exactly what happened. He could not close that $5 million. And that's the reason why there was so much on pressure on him. There was so much on pressure on him put in by the chairman, which is wrong, because that was our job, that was not his job. Okay, that he went and started shopping around in the market like a completely inexperienced guy. He went down and got some dudes from UK, some dudes from Germany, some FTR kind of guy from Canada. The only reputed guy that came on the table was Eric Sprott. And it is in writing to the board and the chairman. I said that if Eric Sprott comes in, all right, Lao Tzu will put their pants down for Eric Sprott in this model. Because I cannot challenge Eric. He is his God. Okay, he is the God of mining. I mean, I look up to him. I mean, I analyze his moves in the marketplace. All right. Okay. Now, and that is completely different to Eric Sprott being involved in Latin American minerals. I mean, that is literally, also in a way disrespecting Eric Sprott. This is not a subject of discussion today. We can discuss later on. But Eric Sprott rejected this deal. Eric Sprott rejected the deal. There was Eric Sprott's London office did a due diligence on Nordic Mines, and they said that this is not our cup of tea. And Nordic Mines was rejected by Eric Sprott. And after doing all of this parade, Sarathi Rajan was on deep pressure that he had to perform. And the pressure was put by me that you have to perform. But I put the pressure through the chairman. I said, the chairman, please. And he failed. And the result of it is FTR. That is if Sarathi Rajan would have said, no, I can't raise $5 million. This is your ball game. Lao Tzu had already put $1.25 million, okay, as debt, had saved the company for close to around about 6 months, starting November 30th, okay, knowing very well that the company will not generate cash flows where it can give the debt back, all right. But in this process, I believe Rajan should have transparently said that that is not my cup of tea. Let me focus on mining. But on mining, he has done the correct thing. Whatever little resources that he had, he has done the correct thing. The sorting part, okay, does prove that there can be an increase, an incremental, not a breakthrough. What I'm looking around for is a breakthrough efficiency, an incremental efficiency, okay, in the head grades. So that is one part of my 20-25% efficiency formula, okay, which I believe in the management certifies. There needs to be a pilot plant put. We will put the pilot plant in the rights issue, okay, and the confidence levels is very high. Biogdal Gold Mining has already tested sorting, and they have now included the resource and reserve statement based on sorting. The geology of Biogdal Gold mine is more or less similar to Laiva. So I think FTR should get its homework and analysis a lot more than superfluously saying that it will not work. All right, it will work. The numbers say that it will work. All right. Now, coming down to mining efficiency. Okay, on mining efficiency, I do not know anything about blasting. Well, if blasting can increase efficiency, fair enough. But why do I have to give 51% to FTR for $0.8 million, for $30 million taking out of the balance sheet, all that financial jugglery? I can pay a check and do blasting. Okay, I mean, don't teach me business. I can do that. That's not an issue. And I will do that. You have taught me something. Thank you. You have taught me that blasting could be another activity for increasing efficiency. Thanks a lot. Thanks for the free lunch. All right. Number two. But blasting was never in my analysis. So with a pun and a sarcasm. All right. What was in my analysis is the gold contract deal, okay, done with Thalquist. You see, nobody is analyzing the fact that Thalquist was never an experienced gold contractor. He had never done gold contracting ever before. Okay, so there was a feeling within Legacy Hill Resources, which I completely understand, that the contract that was outsourced to Thalquist was highly inefficient on cost. Highly inefficient on cost. Okay. And then there is a bloody good room. Okay. A bloody good bandwidth available to just bring efficiency on the outsourcing contract with the third party. All right. If you just negotiate the deal well, if you just bring efficiency into that, you will get some 10-15%, 10% efficiency from the mining front itself. I've got the worksheet as to how $500 comes out of mining, and how, if you do the entire analysis, quite a serious cost goes down to outsourcing. So if you manage the outsourcing contract well and ask this guy, if you make it efficient, okay, if you make it smart, intelligent, there is a very good room, okay, of getting that 10% at least efficiency from the mining front. So what has happened? There's 10% efficiency from the processing plant through sorting, a 10% efficiency from outsourcing contract, and the last efficiency is the infill drilling part. Today we are basically, floating around resource statement, but those resource statement does not mean much if at all you don't get down into reserve statement. How economically can you take out that money? Okay, at the end of the day, what is cut-off grade? A cut-off grade is ore denominated operating cost divided by grade denominated revenues. So what is it? It's the operating cost divided by grades. The revenues, that is, it's the ore denominated operating cost divided by the grade denominated revenues. Now it's a ratio. It's a ratio of cost to grades. So what do you want to do? So if you increase the efficiency in grades through smart infill drilling to figuring out strategic hotspots as to how you can basically manage the grades, there is a chance where, when I spoke to Kuiper and Finos, they are very confident that the infill drilling will upgrade the reserves statement. Okay, so all this NH101 FTR can go and fly kites with it. I don't believe in this NH1. I believe in what is the strategy. Give me the mining strategy. Don't give me NH101. Okay, give me efficiency points. I would say that pre-demerger, these are the 3 points which will give me 20% to 25% efficiency. Sorting, Thalquist, infill drilling. This is what RITES will achieve. RITES will put up a pilot plant. RITES will do infill drilling. And RITES will put the money on preparing the demerger prospectus and negotiate with the third party in getting the contract sorted. And of course, RITES will pay off the composition plan completely. So what do we have? We have pre-demerger a 20 to 25% efficiency plan available, which means that before doing the demerger, I'm at $800 an ounce. Now, when I do the demerger, it is $400 on mining and $400 on processing. Now FTR will say, but what about the $10 to $12 million of sorting pilot plant or sorting plant that you have to put? Yes, that's a genuine question, because when I'm increasing the certainty of my business model, it's all about certainty, right? Not uncertainty. Certainty. Sorting gives you certainty because it can be statistically modeled properly. All right. Demerger, certainty. It can be statistically modeled. All right. Mining is uncertain because what happens under the ground is uncertain. Blasting, uncertain. You can't base your business model on blasting. Okay. The point I'm trying to make over here is that once you do the demerger, then all the costs of sorting, the capital cost of sorting, okay, putting up the machine, and of course nobody will put capex, okay, it will be opex at the end of the day. What will happen is that they will bring the capex into the from the balance sheet to the P&L. It's like buying a car versus leasing a car. Okay, so I will bring the cost into the P&L. If you bring the cost into the P&L, the burden of $14 million is no longer there. It basically gets embedded in the operation cost. But yes, it's a cost. The cost will be absorbed by the risk taker who is taking the risk in the processing plant. He's not getting a free deal. He knows that sorting will build up that efficiency, so he puts that cost, he puts that risk. He's buying off the processing plant, taking out the operational cost from the books, and putting up the bloody sorting plant. That's not my cost. My cost is to prove to him that it works. That is what is being illustrated in slide number 11. If you go down to slide number 11, the earnings per share from the pro forma statements, which is indicative, of course there might be inaccuracies over here and there. Broadly, the concept is the sum of the parts is much greater than the whole. The return on equities comes something like 25 to 30%. All right. So there is a change in the business model though, wherein now I think FTL will relate to what I'm saying is that Nordic Mines, Liva, is no longer in the business of manufacturing gold. It is in the business of manufacturing good quality ore. So it sells the ore. Like so many Peruvian guys sell ore. Okay? It gets into the business of selling the ore. If Dynocor can go down to 100 small scale miners, processing plant will go down to 1 mine to start off with. Okay? Then we'll go down to Dragon, then go down to Beoogdal, and it can go down to Agnico Eagle. Okay? That is the business model. When you practice that business model and you separate the two pieces together, then you understand what is the valuation, unlocked valuation on numbers. The earnings per share on each asset is much higher, okay, than if at all you don't want to keep much. Rest when we meet up at the EGM, guys. I've taken a lot of time, but I think this was needed. Also, I think that there is a bit of a, I think 8 is when the EGM will come down, and I will present it in a much more a rational way with substantiated documents.
Yeah.
And so on and so forth. So
that's good.
Yeah. So that's where we are. Not too many questions over here. Of course, there'll be many questions. Who are you? What is your experience? This and that. Well, Mr. Miner, I know who you are. Okay, let me just ask you one question. Okay, just one question. I'm getting frustrated, sir. Okay, my one question to you is from 2010 to 2015. What wonders have these miners and management done? Okay, I mean, don't. What have you done? What has Christer done from 2010 to 2015? You please tell me. No, before you ask me who am I, which I'm told you that I will tell you in EGM what is the team. If I tell you that I'm getting a guy from Bain Consulting who has done mining since the last 15 years and today is employed in Russia and the eastern part of Europe and gold mining. He's basically an operation excellence guy who understands how to get mining efficiencies from a business and NPV perspective. If I tell you that if I get the group chairman of a firm, which the group chairman of a firm, global group chairman of a fund, the whole, come on, okay. And then if I tell you that there is a financial expert who will become the CEO and only understand this mine from a financial perspective. I'm only bothered in answering the shareholders how your shares are increasing every day or every month. Report how will you? Market is bothered about the future. The market does not value the present. Okay, how do you make the market discount a lot of future? How do you make the market value you more? Okay. So, but anyways, I will answer your questions at the EGM on a PowerPoint format. Let it that.
That's good.
I'm pretty much sure that I don't want support from all the Nordic Mind shareholders, because there will be some shareholders who would basically ask me questions which are not relevant to shareholder value. Okay. Please ask me questions which are relevant to shareholder value, because I am a shareholder. Okay, so I am bothered about what is my value, what is my entry value, and what is my exit value.
Yeah.
Simple as that. In between all of that, everything else is theory. Let us see Mr. Panda's team and then come with a judgment is my suggestion. Of course. Please, I think you should do that, because I think that's the most important thing. I think that is theoretically, conceptually, and from a financial perspective, I am 100% sure of what I'm saying. I think the execution is what matters, and that is basically the team that is in place.
Yeah. All right.
Okay, guys.
Yeah. Thank you very much, Pranay.
Thanks a lot. All the best for FTR presentation tomorrow.
Thank you.
Yes.
Bye. Bye.
Thank you, Mr. Panda. Thank you.